We're going live right now. Then all share screen, share sound. Hey, Pierce, welcome. Just go in here.
How you guys doing?
Great. Good morning. Here we go.
The difference here is it's not a continuity structure where you're selling something and moving it to another thing you're owning. It's an exit plan.
So my understanding is that I can create a trust, transfer the assets to the trust, functionally sell the assets, even though I'm not, I guess, technically doing the one selling it. You have a trustee managing that. As long as you don't receive the gains personally, you can keep the assets in the trust. First of all, is that a fair summary? Maybe some of the nuances.
Exactly.
Okay.
You actually nailed it on the head, but let me just do some clarifying pieces in between there, right? So what you're doing is you're lending the funds to the trust. And so we're actually doing a cryptocurrency deal right now.
Okay.
The gentleman bought Ethereum for 100,000. It's worth about 12 million. We're going to take the first 5 million and he's going to transfer it from his Kraken account to the newly formed trust account. But he's not going to exchange it. He's not going to have that other account pay him anything. In fact, it's going to be just a direct transfer, kind of like if you were to transfer funds to a qualified intermediary if you're doing a 1031 exchange, kind of like that. Kind of like if you were to put funds into an IRA, kind of like if you put funds into a 401k. The difference here is it's not a continuity structure where you're selling something and moving it to another thing you're owning. It's an exit plan where you're literally exiting your position in exchange for a promissory note and becoming the lender. So in this scenario, he'll be owed back the 5 million plus a rate of return, but he hasn't received any of the 5 million, right? So therefore it's in a deferral state, kind of like an IRA, kind of like a 401k, kind of like a 1031.
Okay. I actually did not know that. So that makes sense. So basically you're transferring the assets to the trust, but the more appropriate way to say that is that you're lending the assets to the trust. Is that fair?
Exactly.
Okay. And the trust can pay you back. And when you do receive those payments, you are going to be taxed at capital, or I guess income level at that point.
Or tax deferral, not tax avoidance, right? This is very important. This is why the IRS looks at this. It's IRC 453 based upon 90-year-old tax law, which is an installment sale. So you're saying, look, IRS, I owe tax liability on that $5 million, right? Let's say in this scenario, it's 2. I know I owe that to you. And the government says, yes, thank you, Hunter, for showing that you owe that to us. But as you receive payments, if it's interest payments, you'll pay ordinary income tax on those interest of the 5 million.
Right.
If you dip into principal, you'll pay capital gains tax. But here's the kicker: that 2 million that you owe the government, it's at a 0 interest rate. So the question is, when would you like to pay 0% interest back to the government? The answer is, I'll answer for you, never, right? You want to keep that in a deferral state. Now, you eventually will pay it, and you'll pay the ordinary income tax. So it's not like we're never going to pay tax. It's just like a 401k or 1031 or an IRA. When do you pay tax on that? Well, when do you start receiving payments? Well, when do you start receiving payments? And this is the key. When does it work for you? A lot of our clients will delay for a couple of years, especially if their income's high. And in the meantime, they can use the funds. They can go back into active or passive real estate deals or stocks, bonds, and mutual funds. Or hard money lending, right? We can diversify the equity into multiple things. So it's perfect for the cryptocurrency person, right? Who's hit the home run lottery on the Ethereum or whatever, right? To sell, diversify, and then get some cash flow going.
Okay.
All right. Welcome, everybody. We are excited to have you here on this Thanksgiving day. My name is Brett Swarts, founder of Capital Gains Tax Solutions. We're going to be talking all things Deferred Sales Trust. Our foundation of what we're about here is helping you escape feeling trapped by capital gains taxes on the sale of your cryptocurrency, your business, any other real estate using something called a Deferred Sales Trust. We're very focused on all things tax deferral and helping you build your wealth with real estate, with traditional investing in securities. And I'm joined by my kind of co-hosts and business partners, Jake Miller and Pierce York. Guys, how are we doing today?
It's a beautiful day.
It is. It's awesome.
It's a wonderful time. Thanksgiving, Black Friday, all these good deals going on, people out and about. this time of the COVID pandemic and everything else, but people are still moving. People are out there either on the internet buying stuff, making our national commerce work, or they're out there in the streets and the shops.
It's pretty exciting. I think it's also a big crypto purchasing day, right? Traditionally, this is a big boom in the crypto marketplace. Everyone's talking Thanksgiving and all the stuff they've made over the years, all the good buys, explaining it for the first time for people who are getting in for the first time. That was my story in 2017. It was actually like Thanksgiving when my brother and I sat down for the first time, and I think we signed up for the Coinbase and we put our first money in there and we got it going. And so little do we know that we'd be here a couple of years later, helping people who literally have millions and millions and millions and tens of millions of dollars in capital gain appreciation from the time they bought their NFTs, their Ethereum, their XRP, their Cardano, their Bitcoin, all of the above. Pierce, what's your story with the whole getting into crypto? Was it 2017 Thanksgiving?
No, it was a little bit earlier than that. I actually wrote a paper in 2014 when I was in Rome in my disruptive innovation class on Bitcoin. And so I knew about Bitcoin when it was like $200 and something, and I came home super jazzed and went to my family and I was like, you guys, we got to buy this. And I wanted to set up a mining rig and all this kind of stuff. And everyone was like, you're an idiot. And I was like, one of my biggest regrets in my life is I listened to those guys. Yeah. So I didn't get into crypto until probably late 2017 as well, and rode the wave up and rode the wave right back down in 2018. And just kind of held on as much as I could. And then from there, we, just been slowly building and dollar cost averaging it ever since. So I've built it up, put it in an interest bearing account, and we're just holding it.
Well, I'm glad you're here. You have that story now to help others, right? Help others who are are becoming believers in it, and or B, wanting to sell it and defer it and diversify and dollar cost average back in. Buy low in real estate and businesses and the securities market, and or the crypto market, right? Which is the beauty of the Deferred Sales Trust. For those who are learning about it for the first time, you can do a lot of things. And the question is, what do you want to do? Which is part of what we're here for, to help you clarify and build a deferred sales trust tax deferral plan, making all things simple. Deferred sales trust, and that's the vision of this, and connecting the worlds of three worlds. Really, there's the traditional financial advising world, there's the traditional kind of commercial real estate investing world, and then there's this cryptocurrency investing world. And how do we bring all three of these worlds together? Well, part of what's holding them apart is tax, and in particular, capital gains tax, somewhere between 30 and 50%, depending on what asset you're selling, depending if it's short-term or long-term gains, depending on if it's what state you live in, depending on what income level you're at, and all of these things factor in. And we like to say around here, this no longer just about cash flow or even appreciation on your assets. It's about tax flow. And the reason is the government has, I think it's now somewhere around $29 trillion of debt, and they're running out of ways to collect, and so they're raising taxes and they're increasing tax rates. It does look like Biden's tax proposal is going to be somewhere on federal from 20 to maybe 25 or 26 or 28. That's a lot to consider, and as people are selling their assets. And so that's why we're here, and we're excited to help you clarify, to see if the deferred sales trust is a good option for you. My role, by the way, if you're wondering, as founder of Capital Gains Tax Solutions, is the trustee, third party unrelated trustee, which every trust requires, kind of like a custodian of an IRA, kind of like a 1031 company, kind of like a few different things. But really, we want to build a dream team and or executive team to help you make great decisions with your wealth, and to go beyond just tax deferral, but building it and investing in real estate and or investing in traditional securities, which can also help you to diversify your current net worth, which is also why we have a part of the dream team, Mr. Jake Miller, who trains CPAs, who's a financial advisor, who helps to bring lending to very large business deals, very entrepreneurial type of financial advisor, out of the box thinker. Jake, any thoughts on the vision of why we're here?
Brett, I think you said it very, very, very well. Essentially, people with highly appreciated capital assets, whatever it might be, business interest, rights or warrants to a future asset like stock options or stock warrants, as well as, assets that you might have held for a very, very long time. We talked to a lady the other day that has held Exxon stock for like 40 years. And it's like, wow, yeah, incredible. It's worth quite a bit more than it was back then. Real estate as well as crypto. And so there's a lot of different things that we can be doing. Essentially, with these highly appreciated assets, we help people incur this transaction to move the asset into another asset without incurring taxes. And that's very helpful for a lot of these serial entrepreneurs, Brett, that we speak to, who, they made their wealth. They had their cash cow, whatever business or venture or opportunity that they took advantage of, where they made it big, and they'd like to not lose it all immediately to taxes. And in a way, it can be allowed that you continue to reinvest it moving forward through a strategy like this, the Deferred Sales Trust.
Fantastic. And so that's kind of the vision. And then we're going to cover kind of the deal close story of the week. And then we're going to open it up for frequently asked questions that have come up during the week, and or any of the audience that or any of the participants who have questions for us. So the deal close story of the week comes from the great state of Colorado. And this particular gentleman, he's actually from Switzerland and originally, and dual citizenship, and he's a character, and he's in agricultural business that he's selling, and he's been doing this for 30 plus years, and he has zero basis on the business, and he's selling the business for about $1.5 million, and he's facing a substantial capital gains tax and depreciation recapture. And so he met us about 60 days ago, maybe 65 days ago. And he said he has an accent, and he has a great sense of humor, and he's very good with numbers. And he said, Brett, I don't want to pay all the tax. He goes, I want to be able to defer the tax. I've been working all my life, and this can substantially increase my net worth over time. And so he basically called and said he's ready to go, which was it's kind of different than what it used to be. Let's just say 5 or 10 years ago, where folks, it's more of an outbound outreach to folks with selling real estate, which is my background. And I do still sell real estate as well. Whereas more of a cold call, educate, meet, and then close. Whereas now it's much more inbound, right? Where folks are finding us online. They're attending these types of meetups. They are looking at our videos and our podcast, and they're coming 90% of the way there. So that's exactly what he called me. He's like, Brett, I'm pretty much there. Just, help me understand the fees a little bit. I do want to know the legality and make sure that, confirm the stuff that you're saying about the legality of this. And, but my tax problem's here, and it looks like you can solve it. What do we need to do? And so that began the process of about, we probably spent 2 to 3 hours together over the next few weeks with the tax attorney, and myself, and going through it, and we just closed. And so his deal is a little bit unique in that the buyer, he's financing the buyer for a part of the sale. So the buyer put an initial $380,000 as the down payment. And our minimum is typically $1 million net proceeds, $1 million gain, which he had on his entire deal, but he's getting it in installments. So he's slowly going to be receiving these funds, which a common question is, well, can I do a traditional installment sale with a buyer and a deferred sales trust at the same time? And the answer is yes. And the reason is you can slowly move funds into the trust over time. And do I qualify, even though it didn't hit the $1 million net proceeds, $1 million gain on the first transaction? And the answer is yes, because he's slowly going to be rolling in more into the deal. And so he's going to get another like $570,000 or so in about 6 months. And then another 500 or so after that. It's about $1.5 million total deal. And it's going to help him defer somewhere around, in rough estimations, about $400,000 of capital gains tax, which is about a third of the deal, a third of the equity from the sale. He had no debt on the business. And he goes, I'm about 33% ahead. This makes a ton of sense. And so he did the deal. And so I'm going to pause there and see if Jake has any nuggets that he wants to pull out of there or any questions on that.
Well, it's just interesting, Brett, that we were able to accommodate him in his very specific circumstance, right? I'd be kind of curious to know his next steps, what he's planning on here in the 2022, because he seems to be an individual who's always moving and doing a lot of different things. How is the Deferred Sales Trust going to help him going forward? If you could share that.
Yeah, I mean, besides deferring the tax, as well as he's also going to be working a little bit here the next couple of years, and so he's delaying some of the income tax from the trust as well, and that's a nice benefit. So of a bit letting the trust compound and build its wealth inside, as well as simultaneously lowering his overall net income tax on his what he receives for the household, and so those two things are very helpful for him. And then at the end of the day, the reason he was selling is because he's ready to retire, right? He's ready to retire. He has all of his eggs, let's just say, in one basket because it's all in his business. This is like the majority of his net worth. So it's given him some peace of mind to be able to diversify. And he is more the traditional type of investor. So he's not the type that's going to be going into real estate per se or going into cryptocurrency. He's more of, hey, just conservative, stocks, bonds, mutual funds, investing. I want to preserve the wealth. He's a little bit older, so he's in more of a preservation stage and peace of mind and legacy building rather than the accumulation or massive cash flow. Now he does want a consistent cash flow when he does officially kind of retire fully from the business as he's receiving that earnout. So there's a number of things that it does for him on that. Does that answer the question, Jake, or any thoughts on that?
It does, and it helps kind of represent the more traditional client that we've had previous to this big crypto climb that we've been experiencing the last year or so. And I think that there's still plenty of clients like that out there, even though we highlight quite often the crypto clients or the big warehouse clients or the big business clients here on our weekly show.
Mm-hmm. Absolutely. Pierce, any thoughts on that or questions or any nuggets you want to pull out?
So the interesting part about this one is that he wasn't qualified initially, but the fact that we're doing the deal over, a long period of time, he's going to continue to add it, and that qualified him is an interesting little kind of nugget that I pulled out. So it just speaks to the flexibility of this thing.
Absolutely, because he can still finance the buyer, right? Because he wants to make that deal, which can increase his overall $1.5 million sales price, but also not have to forego the ability to do the tax deferral. And so yeah, we like to say the Deferred Sales Trust is like the Netflix way of exit planning because it's very flexible, right? You don't have to do a 1031 45-day identification, 180-day close, equal or greater value, which is why it's like Blockbuster, right? And by the way, 1031 exchange doesn't work for a business sale anyway. So he didn't even have a 1031 option. But even if it was a real estate deal and he was financing the seller or the buyer, he could still slowly roll that into the trust, which I have a client in Monterey who did the same exact thing. He financed the buyer and he put it in the initial down payment, and they have about a $250,000 that's coming at the end of this year to fund his trust. And he's done it with multiple sales now. And so it just becomes two promissory notes, right? And one trust, two promissory notes. Each kind of chunk that comes in, it's on its own schedule to be paid back, but it's consolidated into one type of investment allocation or one type of investment strategy. So whether you have some cryptocurrency, a high-end primary home, a business, commercial real estate, whatever, right? If you have 5 different assets, you can have one trust and you can slowly consolidate each of those into the trust and pay off your debt, get the liquidity, get the diversification, get your powder dry for opportunities when it makes sense for you. No timing restriction to go back in. You don't have to rush around. You can dollar cost average, and you can kind of sleep better at night with your wealth. And so that being said, we're going to open it up to questions or thoughts from the audience. You can also type in the chat if you have the question. You can unmute yourself and open up. So at this time, does anyone have any thoughts or questions on that deal story or this the Deferred Sales Trust in general?
Question on this particular story. Is he earning interest on the carryback as well?
On the traditional seller carryback, he is, right? Which is a good point to bring up because typically these seller carrybacks aren't that high. Because some people might say, well, how about I just do a traditional seller carryback with the person? And the first question I ask, well, what are you carrying back at? And a lot of times they're like, well, 4 or 5%. I'm like, well, what if you can make 8? And they're like, well, yeah, that makes sense. I'm like, yeah, 8 is what our target is net of our fees. Not a promise, not a guarantee. But also typically, if you get private financing, like hard money lending, it could be as much as 12%, 10, 11, 12%. But a point or two, a lot of these folks that are carrying back and being very generous with the buyer aren't charging any points, don't have any prepayment penalties. And they don't realize how soon that buyer is going to pay them back. And sometimes it catches them by surprise in that they're like, well, I didn't know he's going to pay me back in just 1 or 2 years. I'm like, well, yeah, that's what they want to do. They want to refinance and get a lower rate at like 3%, right? 3.5%, 3.25%, because they don't want to pay you the 4 or the 5. And then you're stuck just paying the tax anyways, but not with the deferred sales trust. If you have that in place, you can obviously roll that in there. But even more so, sometimes people are thinking, well, if I provide this financing, am I getting a higher price? And it's not necessarily the case, right? I mean, this scenario for the business sale, it could be if it's a unique scenario where the lender is not lending on that particular business, right? Versus some real estate. But I would say, especially if you're in real estate, you're better off right now letting the buyer get his own financing, right? Getting its, because loans are very, interest rates are very low. If they can obtain that might be better for them anyways, instead of you financing them. It may take a little more time to get it done, but the tax deferral is going to be more seamless for you, and the equity is going to be diversified. Does that answer the question, Pierce?
Yep.
All right, we do have another question here. Is there any benefit to doing a 1031 given this strategy? So the reason I would use a 1031 exchange, and by the way, we still do 1031 exchanges for clients. I'm a commercial real estate broker since 2006, started with Marcus and Millichap, and we still do 1031 exchanges. What we find the reason to do a 1031 blockbuster is when you can find that deal that makes sense. What makes sense is up to you. Cap rate makes sense for you for value add appreciation opportunities, right? So I'm a huge, huge fan of commercial real estate when the intrinsic value of the property makes sense and I'm buying it based upon that, not letting the tax tail of a 1031 wag the investment dog, but just say, hey, I'd buy this property anyways. And I happen to be in 1031, so I might as well do it. Same reason I think about the opportunity zones. It's like, hey, am I going to do the deal just because it's an opportunity zone? No, I'm going to do the deal because I wanted to do the deal. If it happened to have an opportunity zone component that I have some additional tax incentives to do that, then that's great. But I don't want to let the tax tail wag the investment dog. So, which bears the question, well, are you finding deals that make sense today? Right. And I'm in California and I have clients in New York. I just closed another deal in New Jersey, Texas. We're working on a $55 million deal in Florida, all of the Colorado, all these deals. Washington, there's properties don't make any sense. The prices are so high. Mostly, it doesn't mean you can't find a needle in a haystack, but the problem becomes when you have that 45 days and 180 to identify. So yes, the 1031 makes sense if you're in a place in your life and in your real estate investing where you think it's a good time to buy, and it's a good time. Now, the one thing you do give up is a brand new depreciation schedule, right? So part of the deferred sales trust, if you were to buy that same property, you can get a brand new depreciation schedule versus the old 1031 schedule traveling. So I have a whole series that you can check out on YouTube. It's called the 1031 exchange versus the deferred sales trust. I have one called the Delaware Statutory Trust versus the deferred sales trust. There's two get mixed up quite a bit, but the key is clarifying what you're trying to do with your wealth. If you think it's a good time to buy, what your depreciation schedule is, what your income tax schedule is. What about estate tax? Like, are you an ultra high net worth individual who's worth more than 22 million married, 12 million single? Well, let's look at that too. Let's figure out how this fits in your overall legacy. Let's not just look at the tiger by the tail, which is capital gains tax. Let's look at the estate tax, which could be 40%. We just did a deal in Colorado. This is a $25 million client. They sold a $5 million apartment complex. The primary reason they did the deferred sales trust was because of the estate tax savings. In one day, we moved all the funds outside the taxable estate without having to give it away to charity, without having to do a lot of gifting. They also had a no depreciation schedule, and they also didn't want a 1031. So it hit it was like a grand slam on every single level. But you've got to make sure you're doing an audit of where you're at financially and tax-wise and see if we can connect those two. Jake, any thoughts on that?
You know, a lot of our conversation nowadays has transitioned quite a bit. Beginning in the industry as a wealth advisor, a lot of our conversations were always return on investment, internal rate of return, accounting rate of return, things of that nature. And nowadays, it's a lot more of what is the tax implication? Because even if you do an amazing 100% rate of return, what am I giving to the government? Is that comparable to what I could have done with something at a lower risk, right? And so discussing risk and discussing rate of return, what are their objectives? Just like this original client that you mentioned that was more traditional, that his goals and objectives were just to kind of sail on through retirement in the most tax efficient way possible. The dynamic of today's wealth discussions has changed from what it used to be. And for a lot of serial entrepreneurs, the old mold doesn't necessarily work, which is why the Deferred Sales Trust becomes a financial tool or a strategy that allows them to continually reinvest from one asset into another asset, into whatever is good. They can sell out of real estate when it's high, and they can wait. They don't have these arbitrary timing limitations and restrictions. They can wait, or they can reinvest in stocks, bonds, mutual funds in the interim. They can jump into a little bit of crypto if they prefer. They can find that appropriate deal if it's 2 years later without any issues and reinvest in that real estate deal. And with timing on their side, with the Deferred Sales Trust, a lot of times the clients that we talk to, Brett, at the end of the day, they ask me, well, what is the common denominator, the typical best thing about the Deferred Sales Trust that you tell people? And I would tell them that it's the control over the timing of when you incur taxes, because you essentially are able to continue to roll over these transactions and keep them at arm's length so that they never touch you until you choose to take that distribution. And that truly is the powerful moment, because from a planning perspective, a planning viewpoint, if there's a year that is more favorable to take the tax hit when it's not really such a hit, not really such a big blow, being able to say, hey, in this year, I'm going to take money out of the DST, I'm going to take it personally and receive those funds in a more favorable tax situation. That truly is the magical power of what the Deferred Sales Trust does for people.
Very good. Excellent. Now we're going to move to the next question, which is this. Is this the right place to step through the mechanics of the DST in regards to the crypto, stocks, and real estate? It absolutely is, Robert. Thanks for the question. And Helen also says, I'm interested in going through the mechanics of the crypto DST as well. Yeah, so let's go right through that. So we and if you go back in some of the other episodes too, we break that down, but we love breaking it down every single week. But as of about 100 days ago, the first DST cryptocurrency sale happened in the history of the Deferred Sales Trust, which goes back 25 years, which was pretty remarkable given that most of the deals were public stock, private stock, real estate, businesses, primary homes. But for the first time, the cryptocurrency deal happened, and it was a Bitcoin sale and Ethereum sale, kind of a dual two coins into one trust for a gentleman. His name is Peter. I wrote a whole blog on it, and go to capitalgainstaxsolution.com to hear his story. And Peter is married, 2 kids, and he's looking at selling. He bought Ethereum and Bitcoin collectively for about $100,000 over a number of years. And the value ballooned up to $6 million in 2017, crashed, ballooned up to $9 million about a year ago, kind of went, and then to 13, then crashed and went back to 13. All over the board. And the bottom line was he was trapped to fill by this capital gains tax until he found us. And so we had a first step. One was to open up a trust account itself. So that's really the step of every single trust, is to open up a trust account. And you can go to capitalgainstaxsolutions.com. And if you have $1 million net proceeds, $1 million gain, schedule a one-on-one consultation with myself or one of my team members. And we can get that step going to clarify that this will work for you. And then step 2 is to get with the tax attorney with us. And that also gives them a chance to form the trust, understand your goals, answer any questions you have. And then from there, we take that brand new EIN and that brand new trust name, which only does business with you. And we go to a place called Kraken, and Kraken's like a Coinbase, like a Binance, and they're an exchange. And we opened the account. When we first did this, it took forever. It took about 60 days. It felt like forever because usually you can open up accounts in 24, 48 hours with most of these exchanges. But they asked the KYC questions. They went through who we are, what we do, how we do it. Is it legal? Making sure that the client himself, Peter, was connected with the actual exchange account, and the name of the trust, and all of these things were correlated correctly. And then from there, he actually just transferred from his cold wallet to an exchange, and from an exchange, he moved it over and transferred it to the trust. And that's really the key here. The key here is not to sell your Bitcoin or Ethereum to cash, right? That's taxable, but to actually transfer the coin to the other DST account. Okay. And from there, we sold it collectively together, all transparency, everything set up. In fact, we started with a smaller amount. We started with, I think, $1 or $2, just to make sure that all the pipes were connected correctly, right? You don't want to be sending millions of dollars to a new account without first testing smaller amounts. And so we did that. We also had the bank account set up, right? And so he knew where the money was going to ultimately land, which is the name of the trust account. All of that's all kind of, it's like you're building the foundation before we execute. And then on a random Saturday morning, I'm driving actually to the Bay Area to study, to take a crash course on an insurance exam. And I'm driving, and I got a call, and he's like, "Hey, it's go time." I'm like, "Really?" He's like, "Yeah, we hit the $3,000 mark at Ethereum. That was his target price," which is something, if you're listening to this, I encourage you to not only have a plan for your wealth, but also a plan for your exit. Cryptocurrency can go high and low, high and low. And if you can capture that value and those dollar amounts and put it into a dependable, cash flow, right? Have that target in mind. And that's exactly what he had. He goes, "Brett, I'm not going to sell until it hits 3,000 or 3,000 for Ethereum. But when it hits 3,000, I'm going to sell about 5 million. So it hit 3,000. He transferred 250 at a time, 250 to start, then 500, then 750, then a million, then a million, a million. And within an hour, he had transferred, click of a button, just like you would transfer anywhere else, to the exchange account. From there, we sold it immediately to USD. And then Monday came around, and we transferred all the money out. So that's the short answer. Jake, you want to pull anything out of there or add to that?
So the mechanics of it all have I want to say that the skeleton of the design is the same, but they've improved, just as you were mentioning, from the very first time that we set up a Kraken account to what the process is now. It's lightning faster, in the sense that you have a representative from this institution that works just with you every single time. So you have the same person. I mean, that's, anybody that set up a digital wallet knows that doesn't exist almost anywhere. And so pretty powerful that we're making enough of that we are causing enough of a wave, so to speak, or that we are having a big enough impression on other people that even institutions are modifying the way that they do business to better assist us and to be there as we are helping people with their crypto accounts, their Kraken, their other digital wallets with other institutions, and that we are helping them reinvest these assets. And again, it's not so much that it's crypto, it's not so much that it's any of these other types of assets. Let's just be unbiased when it comes to whatever asset class that you have. Wherever there are highly appreciated capital gains, there's a good, better, and best way to go about moving money in and out of those assets. And the Deferred Sales Trust is what makes that and facilitates that at arm's length, so that you're not receiving constructive receipt. And so, no, Brett, I think the mechanics of everything that you explained is pretty on, spot on. And as far as moving forward with other people, it only gets better with every new client.
Absolutely. And then what he's referring to, by the way, is a gentleman named Chase. And we love Chase over at Kraken because he actually got on a Zoom with me, right? And we went through it, and we talked about some of the challenges, and we went from like a 60-day turnaround to a 21-day turnaround to a 14-day turnaround to like, we're about, 3 to 5 days now. So if someone shows up and we can form the account, in fact, we can start going right now and making the connection. They're going to want to KYC who you are. They've already KYC'd me and my company, and they overviewed the trust documents. So they kind of have that framework now. Now it's just plugging and playing and making sure we're getting them the information they need, right, in order to actually open the account officially. So yeah, that's the mechanics there. Does that answer the question, Robert and or Helen, or would you like any further clarification on any of that?
So I would. Do you have to use Kraken?
So far, we can use anybody that allows us to open it up. But what we've found is that certain exchanges like Coinbase so far, I mean, I reached out to them months ago, and it's just crickets, right? So
what if I have a broker that can work with you? Would that work?
Even better, especially if you have a live person on the other end that you're working with, Helen. Yeah.
Right.
That is ideal. And we want to, if you're listening to this from Coinbase, from Binance, right? Any of the major exchanges, we highly encourage you to reach out to us so we can get you anything you need so that we can move business and help more people out. But absolutely. So if, that would be, we're happy to work with all exchanges. And we want to make this as efficient and seamless as possible.
Okay. And then they would, we would sell the trust would own the crypto. Is that correct?
Correct.
And then once it's traded, the trust has a bank account where it stays, the USD?
Correct.
Okay.
Yeah.
And that bank account is where the broker would be sending the traded or the fiat.
There you go. Yeah, exactly.
Okay.
That's you got it. Mm-hmm.
Then is there a charitable trust that can work with the DST?
Yeah, so we could do two separate ones. So sometimes that does come up. Should I use a DST versus a CRT? And you're welcome to do both. Like you don't have to do 100% DST or 100% CRT. However, we do like to say we're like the CRT, except no C is required, meaning that you can control how and where you give to other groups that you want to give to without irrevocably having to give it all away upon passing, right? And so we think
that's perfect.
Yeah. And so as the money, so again, you can do a couple ways. Let's say you had $3 million of crypto and you want to do 1.5. Okay. And 1.5, you could do set up a CRT and you can just do it directly to that. And 1.5, you could do the DST, or you can do all of it into the DST, and the income that it produces, you can immediately just start paying to charity or a percentage of that, whatever you feel good about. The reason I like the latter with the DST is because it gives you the flexibility that should leadership change in that charity that you believe in and that you're trying to support, right? And all of a sudden, what you thought today that you set up when you pass away, their leadership because of 180, and you're going like, wow, like mom and dad never wanted to support that if they knew this was happening. Whereas the DST, the kids can step into your shoes and your values and your beliefs and what you believe in to give to, they can immediately turn it off, right? In other words, it first goes through you to the charity or to your kids and to the charity versus, again, irrevocably just be giving it to the charity. So I always like to say the accountability is held and basically where the money's flowing from, right? Part of why we don't have a lot of accountability in the government is because for at least the federal tax dollars, it feels like, because they don't see or touch or feel us, right? I mean, we send the money, it's there, and they do whatever they want with it. Whereas at least if it goes through the DST, we can see, touch, and feel who we're supporting. And if they're not doing what we believe in, then we just stop and give it to a different charity. So hopefully that answers the question, Helen.
Yeah, it does. Thanks. Let me ask you a question about if I want to say sell my crypto now, does it have to go through the trustee to say to approve that, or how does that work?
Oh, as far as the timing of it, you decide whenever you want to transfer it to the trust. Okay, so if you say, look, I've got.
But you're transferring the coin to the trust, right?
Mm-hmm, correct.
So, but I want to now, it's reached 4,000 or whatever. I want to now quickly, because you know how volatile it is. I want to quickly cash out. Do I have to go through a process with the trustee to be able to do that?
Oh yeah, we work together. That would be me. Yeah, we work hand in hand. So how we've done this in the past, like we have another deal that Jake Miller and I just did for a client who worked for Google, and she bought crypto for like 50,000 or 30,000 and went to 50 million. And she just did the first 5 million sale.
Awesome.
And as you know, folks who are in crypto, you guys are the experts about transferring and trading and executing these things. Okay.
Mm.
And so how we've typically done it, just a screen share, and we're both live together and both have the codes. And again, we've already tested it with the smaller amounts and then bigger amounts. And so that's exactly what we did. We do it together. And then, so it transfers over and then, okay, ready to sell it to cash. Okay, put the order in. So we're doing it in real time. What we recommend is we're only going to sell it to USD, or we're only going to transfer it to the trust when we're ready to sell it to USD, right? In other words, we want to, if you're not ready to sell to USD, then don't transfer it to the trust. So it's all happening kind of like right after one another. If that makes sense.
Huh. So you're not transferring the coin to the trust, you're transferring the asset. Well, it's not really the asset, it's just the money.
No, you're transferring the coin to the trust.
Oh, okay.
Yeah. So it's in Helen's name. And you transfer, let's just say 5 billion of Ethereum. Okay. Now it's at the trust. Then from the trust, we're pushing a sell order to sell it to USD.
I see. Okay.
Cash comes in, then we transfer that out to the bank account in the name of the trust.
Thank you so much. Thank you.
Yeah, you're welcome. We have another question here from Robert. He said, well, what about stocks? Yeah. So Robert, it works for public or private stocks, which is beautiful. In fact, one of the best stories was some original Netflix team members had some public stock that went highly appreciated, and they were able to use the DST. Okay. And so, which is really, really neat. What kind of fee structure can one expect to pay for the DST? So it depends on the size of the deal, but just a general rule of thumb, I used to use $1 million to give you a sample. If you had $1 million of crypto you're selling tomorrow, you're gonna pay about $15,000 for the Deferred Sales Trust legal one-time fee. And then on an ongoing basis, let's say $1 million hit the account, it'd be about $20,000 on an ongoing with a few other miscellaneous fees, right? And so that's why we like to have $1 million net proceeds and $1 million gain, so that you're not, so you have enough pain there, and we have enough value to defer that gain, right? So that's a typical fee structure. And we also have one from Aaron. Aaron says, what about the ability and ease of selling through a DST appreciated non-publicly traded stocks or warrants in private companies that you actually like to retain for future appreciation? Say you sell now in private names ownership and then cash out part of the acquire same number of shares. So Aaron, do you want to come off of mute here and say that? Because I'm not quite sure I'm following all that. I want to make sure I'm answering the question. So are you still there, Aaron?
I am, Brett. How are you?
Hey, I'm well, Aaron. Happy Thanksgiving to you, sir.
Thank you. Can you hear me okay?
I hear you great.
Yes.
So I was wondering about the ability to take something that's privately held in your own name and trade out into the trust. And then whether you want to cash out part of it or all of it. But if you did want to retain it for future ability to go IPO or whatever it might be, is that something that you would even contemplate putting into the trust and then reacquiring it at the newer, higher value today?
So it all depends. Let me ask you just a couple quick questions. So can you tell me what is the asset? Is this a real estate? Is this a business? Is this?
Oh, no.
What is it?
So privately held stock and early stage company.
Okay. So it's a privately held stock, early stage. So it's just stock. It's private. It's not public, pre-IPO.
Correct. Exactly.
Okay. Got it. And your goal is to actually sell at the high, right? But you don't want to pay tax, correct?
Correct.
Okay. So you could do it one of two ways. And some folks, depending on the group that they're working with, right, they may accommodate you prior to, and we always try to say, be early with this process to see if they allow you to set this up. If they don't, then when it goes IPO, just whatever you do, don't sell the stock, right? Whatever you have, the crypto, the stock, the business, don't sell until you have the trust set up that we can transfer the rights or the ownership to the trust prior to selling it to the open market. So the answer really depends upon A, your timing of when you want to sell, and B, can we set it up early or do we set it up pre-IPO? What is your concern, by the way? Is your concern that they're not going, it's going to happen so fast, you're not gonna be able to do it? Or what, give me kind of your feedback there.
No, the idea was to not that it's on a high right now, but that it's going to continue to appreciate and then hopefully go public or be acquired in the near term, say the next couple of years. So the thought is the ability to take some cash off the table, benefit from some of that upside, but allow the majority of it to continue to grow.
Oh, the answer is yes. So let's say you had $5 million of stock and you want to sell $1 million of it now, right? To take some chips off the table. Yes, you can set up the trust, transfer the $1 million, right? As long as there's a willing and able buyer. And another way to answer is you wouldn't pre-fund the trust until you're ready to sell it in the open market. The same reason I told Helen.
Okay, that answers the other part about the remainder that you want to keep. You would just
there's no reason to pre-fund it until you're ready to sell it to cash.
Got it. Perfect. Thank you so much.
Same thing until you're ready, right? You're welcome. Jake, any thoughts there?
No, I mean, that's a great example. That's very similar to like the stock options and some of the stock warrants that we've been working with some of their clients, both here in the US, or they work for foreign corporations, but they receive the proceeds here in the US. It's definitely an item that comes up frequently, and it's definitely something that we can use the trust for.
I have a question on that. So I actually ran into a gentleman who had a bunch of money in a privately held company, and he was interested in the DST, but his biggest concern was the fact that the company would not allow the DST to purchase the stock because it's privately held. Have you guys run into that at all? Like where the company controls who can and can't buy the stock?
Yeah, so there has to be some flexibility. Occasionally that comes up. Anyway, go ahead, Brett. No, right.
No, I was going to say exactly.
Sorry about that.
I'm back. I'm about to golf here, about 18 holes. Yeah, occasionally it does come up. But what we found is when people are early, and this is part of why we work on a no cost, no obligation basis, and we educate people and we give people a chance, because you got to think it from that perspective too. They're in the process, especially if they're going go IPO, they got a lot of employees or a lot of people that are involved here, and they're trying to make this thing as simple on their end as they can. So adding any layer of complexity can be frustrating or overwhelming for them. This is why we say be really early, present this now, if it's even a year or two away. And once they digest it and they go, oh, it's just some estate planning. If you go, hey, I'm doing some estate planning. It's kind of like an IRA. It's kind of like a 401k, but I just want to be able to assign my privately held shares to a trust. Would you please cooperate? Right. 99% of the time they're going to cooperate. Right. Once they realize that, oh, it's not last minute, and not adding a whole level of complexity here. They're just simply saying, instead of sending it to me, you can send it to the trust. That's it. Like that's as simple as that. You don't have to, it doesn't change anyone else's structure or anyone else how they want to pay their tax. It really should be that simple. But where it becomes when people either are caught off guard, or there's not a lot, closing in 2 weeks, right? Then they're like, yeah, I'm not cooperating with that. Like we've already all planned out. It's already here. You got to realize that they could say no because of that, because they just don't know. They don't know. So be early, but more than likely, the majority of the time, I'd say 95% of the time, they are just saying, yeah, no problem. Here it is. That's fine. You want the money sent there in that trust? No problem.
They would have to sell the stock to somebody, right? So who that person is, right? Whether they sell it back to the company or whether it's not like they couldn't just sell it to anybody on the open market, like a public stock. So,
well, if it's private, right? There may be some restrictions on who it can be sold to, right? So, but yeah, right. The deferred sales trust does take a third-party buyer, right? Who's buying it.
Gotcha. Mm-hmm. So, but the company does have the control over that.
Yeah, ultimately, usually the company, if they're not going to cooperate, right, and you're not like a board member, then they may not. Now, if it goes IPO and it goes public stock, okay, you could move it over to Charles Schwab or move it over somewhere else, and you don't have any like vesting, challenges there. Then yeah, it's public. You could just set it up on your own.
Cool.
Cool. Any other questions from anyone out there? It's been a good discussion this morning. More thoughts?
How do we work with someone to see what we really need? How do we get to that point?
You spend time with this gentleman named Jake Miller right here, who is a financial advising expert and extraordinaire. And so we sit down, Helen, for next week. We're happy to spend 30, 40, an hour just kind of, developing a financial plan and helping giving us a chance to understand where you're at financially. And so, yeah, Jake Miller. Jake, where can people find you if they want to get that going right away?
Absolutely. So I have an email and a phone number, or a website. So Jake, Jake, and then first letter of my last name, M, at alphamark with a PH, alphamark.com. That's probably one of the quickest ways to reach me. You may also call the 800 number, which you'll get a whole alphabet of different services. And the 800 number is 1-800-773-1848. As well as we have a website, alphamarktax.com, and there is a booking tab in the top right. I also have a Calendly link that I can give you right here, right now. Let me copy and paste it just here in the chat. That also might be one of the easiest ways to just jump on the calendar and we can go over everything. Right, so I'm sharing it with everyone right now. It's just calendly.com/Meller, my last name, /wealth-MGMT, like wealth management, wealth-MGMT. So a few different ways you can reach out to me. We try to be fairly responsive. You usually respond within 24 hours of any message, unless, of course, it's a holiday.
So that pretty much wraps it up for today's mastermind. We so appreciate everybody coming out here after Thanksgiving. It's Black Friday. You could be shopping right now. You could be buying cryptocurrency at the buy right now. You could be doing a lot of things, but you're with us and we so appreciate that. And you guys' investment into clarifying your wealth plan with the Deferred Sales Trust. If we can help anybody, please feel free to reach out. capitalgainstaxsolutions.com. Make sure you rate, review, subscribe to the podcast too. That really helps to spread the message. Invite somebody, invite your CPA, and invite your business partner, a friend down the street who's selling their primary home, or we just did a dentist deal. Anyone who, of course, is in cryptocurrency should know about this. And so we encourage you to share this with somebody and come back next week, every Friday, 10 a.m. Pacific Standard Time, and then 1 p.m. Eastern Time. And with that, thank you so much, everybody, for attending, and we will see you next week. Bye now.
Thank you.
Hey, guys.